Let's take a look at some information and charts on Aave for Brave New Coin. Aave is a lending and borrowing protocol in the DeFi ecosystem. They have gone multi-chain now. They're available on Polygon and Avalanche. We'll take a look at all those numbers. As things get more complex on the analysis side of things, TVL on Avalanche or Polygon is highly influenced by incentives on those chains. So if we just look at the V2 market, so Aave says they have 28 billion TVL according to them. How this works is you connect your MetaMask wallet or any other wallet, and you can deposit or borrow a variety of assets here at a variety of variable rates, which are influenced by supply and demand. And you can certainly take advantage of some of these rates. For example, right now, SUSD at 15% deposit APY. So in general, right now, rates for stablecoins are quite high, which is usually a sign of things being overbought, the market being too heavy in speculation. Borrow rates go up when there just isn't a lot to borrow. Market size here on DAI is 2 billion, total borrowed 1.5. USDC, total market 3.6, borrowed 3.2. Tether 1.1, market size 990, total borrowed. I mean, this is almost everything available to be lent is being borrowed. The plus side of this is if you're a legacy person with a ton of capital looking to park it somewhere, you can swap your USD fiat for USDC or USDT or DAI and start lending on this stuff for crazy rates compared to what you can actually get at a bank. At a bank, it's like 0.05% or something, right? Rates are likely going to go up sooner rather than later, but even still, these rates currently are much more attractive to anyone willing to take the dip into crypto. Now, there are obvious risks in smart contract risk, stablecoin risk, whatever. There are all sorts of risks, but you got to risk it for the biscuit if you're in the legacy world. The other part of this system is if rates go up in the legacy world and we get more risk off in general, borrow rates will go down most likely because less people will be risk on. So it's a very delicate, balanced, delicate system. Everything to consider, especially as crypto gets bigger and bigger and bigger, we will be more and more influenced by outside factors once we get in the billions and trillions and parity with all sorts of other markets. But they're continuing to add stuff here on Aave for the most part, though, just based on total market size. I think I can sort by that. It's the usual suspects plus Link. Link is always up there as far as total market size. I don't know why. But the stablecoin deposit APYs are even attractive against staking on any proof of stake network for the most part. You really don't have a reason to stake on anything unless you think it's going to hold a bullish bias over the next few months, because staking rates are usually 2% or less, and you're better off just throwing some stablecoin here, getting your 3%, calling it a day. These are also incentivized to buy staked Aave or STK Aave. I don't know what that stands for exactly, but they look they look a little better than they are, but it helps the incentives. Helps the incentive side of things. So we can look at their AMM market. We can look at Polygon. You can get different rates on different chains. There's a 10% deposit APY right now on Polygon, 20% on Tether on Polygon. So the rates, the more fragmented this gets, the more fun rate hunting can get, because you see these asymmetries in each chain. On Avalanche, the incentives might be better, but the rates are generally lower than some of these other chains. So always interesting to play around with. The other thing that obviously is these other chains have different risk factors, security risk, whatever else, compared to ETH. Fees might be cheaper, but security is also something to consider always. So if we look at TVL for everything under the sun across the board, at all-time highs here, 270, 272 billion over the past couple days. Aave number 3 at around 16.5 billion according to DeFi Llama. So I don't know where Aave is getting their 28 billion from, but that's probably including other stuff that DeFi Llama isn't counting, and or Aave's double counting some stuff. But nonetheless, still extremely high relative to everything else here. And on the bank, TVL near all-time highs, slightly down from all-time highs on ETH anyway. Borrow volume slightly down from all-time highs on ETH. Liquidations just quiet and flat over the past couple months, really. Nothing has been as crazy as May 18th lately. And we can look at all the other chains, Avalanche continuing to rise in TVL, Polygon TVL flat. And again, all this TVL stuff's going to change based on incentives. Borrow volumes flat on Polygon, liquidations flat and quiet on Polygon. And if we look at borrowing volume across the board for Ethereum stuff, and we get rid of all of the nonsense, basically, Aave's down there at around 7 billion, Compound 8.5, Maker 8.8, total of 25 billion. In borrow volume, that's not TVL, that's just borrow volume. That's quite substantial. And then if we look at liquidations across the board, again, there hasn't really been anything major since May 18th. One way to gauge when to buy the dip or how bad things are is always to look at liquidations, but especially on-chain liquidations, because if on-chain liquidations are high, that usually means there's a cascading waterfall effect for prices elsewhere. Even though 366 million, maybe in the grand scheme of things, not a lot, when it gets sold all at once on-chain or whatever, that is a massive impact. And then you see other shorts piling on, bots piling onto that. So it creates this butterfly effect, definitely. So I would definitely watch for that. Sometime between now and the first week of January, we're probably due for the big one, the big earthquake of leveraged liquidations. If we look at some on-chain stats for Aave, for most DeFi tokens, you're not going to move this stuff around a lot. So the token on-chain activity only really matches speculation. So if there's no speculation, if price is flat, you're not going to see robust on-chain activity. And that's certainly the case here with Aave, which continues to decline in transaction counts. Average transaction values should be rising with ETH fees. You're very unlikely to see declining average transaction values as ETH fees continue to climb. And that's basically what you see here. Aave transaction sizes just continue to slowly creep higher. If we look at NVT and active addresses in the fill here, continuing to decline. Again, not a lot of speculative activity with price lately. It's basically just been in a holding pattern for several months. So there hasn't really been a reason to move this stuff around. NVT climbed quite substantially from 30 in June to over 100 end of October, and it's beginning to decline again. So you want to see this declining if you're bullish. You want to see this low if you're bullish. If NVT is rising, that means there's increasing market cap relative to on-chain activity. So in general, the general rule is you want robust on-chain activity if you're bullish. You need something more than just speculation to get price moving. So to see NVT start to come down, active addresses start to tick up slightly, gives me some hope in this otherwise non-volatile Aave USD price. If we look at MVRV in the fill, MVRV versus price here, market cap over realized cap or market cap versus on-chain activity, similar to NVT. For most coins, they top out at around a 2x multiple on MVRV. For all of DeFi, MVRV seems to be meaningless thus far in that there's no signal here. We're not seeing peaks in MVRV relative to peaks in price. We're just seeing continuous decline in MVRV over time. So we'll see what this looks like when and if all this DeFi stuff hits all-time highs again. But as we sit here now, MVRV doesn't really mean anything relative to price for DeFi stuff. Looking at Aave Google Trends past 5 years, Aave is the Finnish word for ghost. So it's going to have some just background noise from those searches. Baseline here is probably around 25. And we're slowly starting to perk up. So again, things, maybe this is just me reading into it, but it's starting to look slowly more bullish. Just curious what the United States Google Trends look like. Not great. So maybe I'm just looking at noise there if I'm including like Finland and other countries. But in the United States, it continues to decline. DeFi crypto, something else to just watch adjacent to Aave, also at multi-month lows. So not a lot of love for DeFi stuff right now. It's still NFT nonsense and all sorts of Shiba scam nonsense. That's where all the attention is, not DeFi at the moment, in my opinion. Flipping gears to technicals, we have the MA multiplier down here, the 365 MA multiplier at the top, the 5x. Generally, this works as a buy zone in the green, sell zone in the red. Some coins look better or worse on backtesting, depending on time frame and data capture. For Aave, they used to be Lend USD before they rebranded, and there's tons of data here, so you really should use the 365. And if it looks decent on the yearly on backtesting, it should give you some forward signals here. So currently, as we sit, we are on the 365 MA. If this thing goes max bullish towards the end of the year, and it's running out of time to be bullish until January, I don't think we're going to get a repeat of January 2021 in January 2022. But, you know, hey, I might be wrong. I just don't see that happening. In any case, I like 1600 from here, which is a 5x, based on the multiplier with a midline at 1000. So if you believe in this, this indicator is telling you now and any price lower than this is a good time to buy, assuming backtesting is acceptable, which it's kind of loose. You know, it certainly picked some of the lows, but not really picked the highs either. So it's not perfect, but based on where this sits, it looks like a decent buy in the indicator. If you look at the 5200 EMAs on the daily, VPVR, volume, RSI, and I have some fibs on here. If we assume this is going to be bullish, I also like that $1,000 level on fibs, taking the high to low, most recent range. You can see since basically January, this price has gone nowhere. And the EMAs are telling you, as they're crisscrossing over and over and over, this thing is due for a move, certainly. We'll start to know more and more as this perks up a little bit. Everything around Aave has slowly started to perk up. So the expectation for me is that Aave has bullish continuation along with everything else. I doubt Aave is going to go south if everything else goes north. Something that could interrupt bullish continuation for all of DeFi is any regulatory changes. Also potentially coming in Europe in January, in the US in December, I don't know, whenever they decide to go after DeFi stuff. But that's always lingering in the background, just regulatory clarity across the globe on DeFi stuff. So that's likely more to hurt DeFi than to help it, as you'd see forced KYC AML, geo-fencing, geo-restriction. And then at that point, you're just going to see more regulatory arbitrage for other chains like BSC, PancakeSwap. And then you're just going to have more people going to those places, most likely, at least retail. Legacy players may start to rotate into DeFi stuff once there's more regulatory clarity, but you got to think that's more of a bearish event than bullish event, and at least initially. So where this sits on trend, it's flat. There's really no signal there. Just got to wait for that range to get broken, and anything above 400 is game on, bull territory. Look at the cloud. It's a bit confusing. It's in the cloud, has a bullish TK cross because there was a massive wick here, end of October. Overall, though, this is neutral, leaning bearish. You really want to wait this out, and or not even use the cloud because it's been flat since January. You have to ask yourself, are we ranging or are we trending? If we're ranging, the cloud becomes less powerful most of the time because the cloud is tooled for a trending market. And if we're not trending, you're just going to get signals that are bouncing all over the place, which is basically what you're getting here. Now you could always bump up the time frames, look around, but there's just there's no signal for me, long or short, currently where that sits. Aave BTC is coming off the heels of a falling psi. I should really think of an actual name for this, but we see this a lot in crypto. I don't know what the technical term is, but this curvature falling wedge thing. And it's probably likely to go to 0032 at this point. It doesn't look like there's going to be any support here, at least based on volume. You could argue some support from November 2020 on the horizontal there, but most of the volume is still significantly lower. No bull div there just yet. The 5200 cross is bearish. Doesn't look like much hope against BTC. Against ETH, at this point, it may be bad enough to buy. Fundamentally, there's no reason to hold Aave over ETH, probably. Yeah, that could be a whole debate on its own, but just purely on technicals here, if I see a multi-week bull div, I get excited because that means we're starting to get towards bearish capitulation. As Aave continues to go sideways, while ETH goes higher, of course, the chart's going to look like this. It's also setting itself up for a mega mean reversion to this 200-day moving average on the daily. So at this point, I don't hate many rotations into Aave from ETH because it is so oversold and it has been so oversold for a long time. Ultimately, I don't think this thing goes beyond 0.14. I like 0.1 as far as the mean reversion target, which is almost a 2x from here. But at this level and anything lower, you got to think at all-time lows with a multi-week bear div, I'll take a swing at that. I'll give that a shot. Sure, it might go to 03 and I'm just completely wrecked, right? But this is likely to attempt a mean reversion by the end of the year, I'd have to imagine. So you have basically a month and a half to continue watching this. Now you could wait for some sort of double bottom or triple bottom or something that looks a little better than it does now, because it certainly looks terrible. El terrible. But there's a fine line between being patient and waiting for a signal and then just like slowly adding to positions that look like this where they're completely oversold. I don't hold any Aave personally. I'm just saying like this is the type of setup that looks bad enough to buy to me. Lastly, I'll just mention the ETH BTC fund and DeFi portfolio. I trade for Techemy Capital and Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC, or just watch what I'm doing. You can see everything, including AUM performance, allocation, all the vaults I'm in here on Yearn, Comp, and Aave. You can see intraday performance there. You can see all the trades I make in the trades tab down below. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.